Ladies and gentlemen, good day and welcome to the Tanla Platforms Ltd Q2FY25 investor conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Ritu Mehta. Thank you, and over to you, ma'am.
Good evening and welcome to our Q2 earnings call. Joining us with today are Uday Reddy, Founder, Chairman and CEO, Deepak Goyal, Executive Director and Chief Business Officer, and Abhishek Jain, CFO. Uday will share his perspectives on business imperatives and strategic progress made. After his opening remarks, we will be happy to engage with participants and address their questions. Before we start the call, let me draw your attention to the fact that today's discussion may feature statements that are forward-looking in nature. All statements, other than the statements of historical fact, could be deemed forward-looking in nature. Such statements are inherently subject to risks and uncertainties, some of which cannot be quantified or predicted. A detailed disclosure in this regard is mentioned in the results presentation that is uploaded on our website. Audio recording and transcript will be available. I now hand it over to Uday for his opening remarks.
Okay, thank you, Ritu. Hi everyone, good evening. I'm sure you had a chance to review our investor presentation and my detailed letter. Our revenue for this quarter stood at 1,001 crores, and Q2 saw a flat revenue, mainly due to slowdown in international business. We are witnessing several structural shifts shaping the CPaaS market. Digital interactions in India are surging, largely driven by the public digital infrastructure. While SMS remains relevant in price-sensitive market, OTT channels are becoming increasingly dominant. WhatsApp has reduced the price of utility messaging from 30 paisa to 12 paisa, nearly matching the cost of domestic SMS. This price parity is making OTT channels a more attractive, cost-effective options for enterprises. As we move forward, we expect OTT channels to become the preferred medium to customers' interactions. While certain market segments remain subdued, we have successfully adopted to these changes and captured additional revenue market share. Aligned with our strategic focus for FY25, we have strengthened our presence in OTT, particularly by leading category in RCS. Revenue from OTT channels have risen from approximately 10 to 20% in Q2 FY25, with OTT revenue exceeding 200 crores for the quarter. We remain Google's largest global RCS partner and have been named Meta's Growth Partner of the Year for the second consecutive year. In our platform business, we consistently focus on solving business challenges with a strong emphasis on greenfield innovations. In response to TRA's mandate, we were the first in the industry to launch CTA whitelisting on our TrueBlock platform. To the date, we have whitelisted 1.7 lakh URLs, representing 98% of all URLs across telco DLT platforms in India. So this is a milestone. Wisely ATP is also gaining a momentum, especially with the growing regulatory emphasis on user protection from spams and scams. We recently signed another agreement with one of the largest banks, which is nothing but Axis Bank, for this solution. Moving to enterprise communication, the domestic SMS market continues to grow while the price still remains high. We have outperformed in terms of volume growth. The ILD volumes have contracted but have recently stabilized. This quarter, we added nearly 89 new logos, contributing to 7 crores to our revenue, with 35% of this being on new channels. With the global expansion as a focus, we have prioritized select international markets, and we are laying the groundwork for the deeper penetration of our Wisely and our MAP platforms to expand our digital platforms and OTT channels offerings. The the foundational work done in Q2 has positioned us to accelerate growth through OTTs and digital platforms innovations, and I'm very excited for what is ahead. Finally, I would like to take this opportunity to welcome François, the Executive Dean of UNET London Business School, to our Tanla board. Let us move into Q&A. The management team and I are happy to answer any questions. Ritu, let's open it up.
Sagar will start the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. So my first question is on the WhatsApp revenue. So obviously we had seen good momentum there in WhatsApp. It has reached around rate of 200 crores. But if I see the sequential growth, it has been flat sequentially. Obviously, you mentioned that it was because of the WhatsApp pricing cut. But if you can elaborate on what was the pricing impact, because in my calculation, the pricing impact was for 2 months, and it was only for the utility messages, which roughly is 40% of the volume. So the roughly impact would be around 20% from pricing. So is it the volume growth was 20%, and how do you see the volume growth panning out? Maybe with the pricing being similar to WhatsApp of SMS, are we seeing a shift? Maybe a more cannibalization can happen of the domestic messaging volumes to WhatsApp channel. So how do you see it more from a structural cost?
Okay. Hi, Amit. Thanks for the question. And Abhishek here. Just taking a step back, right? WhatsApp grew almost 100%. We were close to 100 CR or a little less than that, or 50 CR a couple of quarters back or 6 quarters back, right? We have come over 150 CR per quarter now. So that has been a robust growth journey, right? We do acknowledge that this quarter was definitely soft due to pricing change. And if you see, the pricing has come by 1/3, right? It has been almost cut by 1/3. We saw a significant volume growth, and from a channel perspective, we are seeing a good use case day by day in WhatsApp, and hence, we are very, very bullish from a WhatsApp perspective. From a volume perspective, broadly, you're right. I will not call out exact volume growth, but broadly, we are directionally on the right side. I can only say we continue to scale up adoption by various enterprises, and we continue to be very, very bullish as WhatsApp as one of the OTTs.
Okay. So, we also mentioned that the domestic messaging or the NLD volume growth has been 8 to 10%. And the earlier commentary was that the ILD volumes have mostly stabilized, but again, we are seeing some kind of drop there. So is there any change that has happened which is triggering the drop in ILD messages? And we earlier used to give the contribution of the ILD to the revenue. If what the contribution has been, because earlier it was 25% of enterprise. What is the number of ILD, if you can share that? And how we see the overall, because the volumes are increasing, but the mix is changing, and the ILD is going down. So the overall impact is not, we are not seeing the growth for the last 4 or 5 quarters. So how do we see the overall the growth scenario over the next 3 quarters?
Sure. So I'll take it up, and maybe I'll request people to add after I finish. So you're right. What we called out earlier, ILD composition was really 25%. It has still a bit lower than that, but not way off the 25% mark. But it would be definitely lower than 25% what we have disclosed. two shifts we have seen, right? Where we have seen IIB use case towards migration towards OTT as an alternative channel, and maybe one or two enterprises would have contacted with telcos directly, right? But having said that, what we have seen is that in Q1 we saw May, June, or primarily May, mid, and June was the quarter where we saw a sharp drop. From then to now, we have seen a drop, but not that bad. I think even quarter-on-quarter looks really little bit standing out. As we called out in the letter, in that letter, from last 1 to 2 months, we see a volume little bit on a stagnant side or flattish. So we hope that we should not see a big decline from here. As we just seen even earlier, just to call out that, while yes, IIB SMS as a channel could be dropping, but we are trying to see an alternate source to WhatsApp where we continue to gain the market share, right? So I would believe that we should have seen worst from an IIB and international perspective overall. But yes, we can't say unless it is done. But I don't expect a significant downside from here as we speak. From an NLD perspective, the volume continues to grow. We have seen how UPI volumes have grown up. So from an NLD perspective, we continue to see a volume growth from a market perspective, and we believe we are only gaining market share there. Deepak, if you want to add something on this.
Yeah, Abhishek. So I agree with you as far as ILD is concerned. You already stated. But in terms of overall growth, what we are seeing is, we have a large chunk of existing enterprise customers. We are present in almost 70-80%. Of the customer where the CPaaS business is getting originated. And currently, what we are doing is we are penetrating with RCS and WhatsApp and Truecaller to these customers. And you would see in going forward basis that our wallet share is getting increased at these customers, which is definitely a very big growth lever for us. We are going to focus on that. Also, your earlier question was if WhatsApp is cannibalizing SMS volumes. Yes, there would be some sort of cannibalization, but that is good for overall, good for the industry, I would say, because a lot more new use cases are getting opened up with WhatsApp and RCS and Truecaller. So while there could be some sort of a cannibalization, but there'll be a good amount of growth would be coming in overall volumes, because customers are clearly seeing ROI through these channels, and our focus is on omni-channel experience to the customer, and that is really you would see in the coming quarters it is where you would see a lot of growth coming in.
Okay. And then in the platform segment, obviously X of the VI deal, the growth is there about 16-17% YOY. But in terms of the journey that we earlier alluded in terms of reaching say 100 crores kind of run rate in the newer products. So obviously we have won some deals on the ATP side. But what's the thought process there? Are we on track or we need some more innovation there? And also in terms of the intangibles, also there is some sharp increase in the intangibles in the balance sheet. So if you can also allude that this is largely related to some newer products getting into the monetization stage.
So Amit, hi, Abhishek. So you're right. I think the vision continues to be the same. We are very, very positive on platforms, and a couple of platforms that we are already encashing is ATP that you've heard. YT Map, which is on RCS side, the Block, which is our homegrown platform, has been doing very well. Coming back to ATP, we had signed one large contract earlier in Q1, and we signed another one in Q2. And with the focus that we see from Try and Dot, to protect users both from spam and scam, only elevate us in terms of where we stand. one of the large telcos also launched recently an anti-spam solution, which has also raised awareness, which would be, and from there on, we see even more larger interaction from the banks on it. So it satisfies us in terms of our early on, production and gain towards ATP that we have gained, where we not just need to find the scam, but also the scammer, right? But yes, the price discovery and the contracting process is a little bit longer. But our vision to take the platform to 100 CR run rate, which we have called earlier, remains intact. Rather than, once we see a success and a couple of customers have a good customer success story here, we would like to take it to international as well, but it's too early to comment on that. Right? So that was on the platform. Second, on intangibles, you're right. Since a couple of platforms have been under development, under progress, few we have called out. Few is very difficult to call out at this stage, and that's why you see some increase there. We do expect some capitalization to happen in next 1 or 2 quarters, as some of the products that we have where in progress is already converted to POC or is in an implementation stage. So that's where we are.
But Amit, let me add a couple of points on Amit. Let me add a couple of points on ATP. Okay, right? Sorry, Uday here. See, we were the first one to recognize the problem statement in India. Okay, back in probably 2022. Okay, we are the only one who has recognized this problem statement. Secondly, we not only recognized the problem statement, we also came up with a solution. Okay, right? And which we and we have deployed this platform with BAL, and we demonstrated this impact with all the regulators and watchdogs in India. Okay, but people are very apprehensive about using the ANML models. They're not very clear. The regulators are not clear. Telcos are not clear. But with the launch of Airtel, Gopal has launched the platform mainly on the voice a couple of weeks ago, and it has really gone very well. So what we're really trying to say is, since now Airtel has come out with this platform, it will help us address the issues. One, the problem is big, so that Airtel is the first one to identify that and acknowledge it by launching the solution, and they are using the ANML model. So they got approval from the regulators. So with this the background, we should be able to accelerate our GTM on ATP.
Okay, sir. Thank you and all the best.
Thank you. Thanks, Mario. Yeah.
Thank you. The next question is from the line of Balaji from IIFL. Please go ahead. Balaji, your line is unmuted. Please proceed with your question.
Let's move ahead.
We'll move on to the next question.
Let's take.
Yes, the next question is from the line of Deepak Chokhani from Raid Capital. Please go ahead.
Hello, sir. I've got 2 questions. Out of the enterprise and platform segment, which segment do you think will drive the growth more, or which sector is in your view for the next 1 or 2 years going to give bulk of the growth? And second question is, when do you think the VF Middle East merger can happen? Thanks.
So Deepak, couple of things I think both the platforms and enterprise are growing, and in fact platforms to a certain extent is growing on the back of enterprise business. Okay, whenever we see for example, I'll give a couple of examples where whenever the SMS the volumes go up, okay, the Trubloq is the first beneficiary of this one. So they have to go hand in hand. And as of today, enterprise business is very, very large. And relatively, the platform business is smaller. So it's difficult to say, but both are growth engines. They're not going at the cost of others' lives. They have to hand in hand. So our focus is to go on both the engines. There is no doubt about that. That's number one. Number two is on ValueFirst. We have an agreement to go up to March 2025, where we're going to settle with outgoing promoter Vishal which the end of March. You want to add in?
Yeah, just to add on that, I think the question was when the VF Global will be integrated. So I think we are still awaiting regulatory approvals. As soon as the regulatory approvals are in place, we should be able to integrate and we are in constant touch with authorities, clarifying all the doubts. The earlier owner is clarifying all the doubts that they have. It's more of a simple name change and so forth. As soon as we get it, it should be integrated. We hope we hope to get that done this quarter, but it's sometimes without it's very difficult to give us clear hand.
Got it. Thank you so much.
Thank you.
Thank you. The next question is from Balaji from IIFL. Please go ahead, sir. Balaji,
Can't hear you, Balaji.
Balaji, sir, your line is unmuted. Please proceed with your question. Sir, is your line muted from your side? Balaji, sir?
No, it is not. It is not.
Okay, please go ahead, sir.
Am I audible?
Yes, sir, you're audible. Please.
Oh,
Yes, Balaji, we can hear you. Please go ahead.
Okay. So, thanks for taking my question. I had a couple of questions. So first is on the CTA whitelisting through TrueBlock that you have mentioned. So what is the revenue model here? As in, is it one time in nature? And is it fair to expect any meaningful revenue from this? The second is also related to the statement that you made on 98% of the all whitelisted URLs, being now, having been processed through your TrueBlock platform. So this would be again, how is this well above the 63% market share that you have in TrueBlock? Is it because it will be for you will be doing it for different enterprises, and the 63% is just the is your share from a telco perspective? So I was just trying to get some color on that.
So Balaji, it's a very good question. Let me first answer on CTA registration and the monetization model. Okay, when the regulation came, and we already have 1 month time to roll out, and it came in all newspapers, and then all the enterprises have reached out to us, and we quickly innovated it, and we launched with all telcos. So that's a big achievement right now, right? So our priority was to enable our customers, our enterprise life. Okay, so that's number one. Number two is yes, sometimes what happens is some enterprises are. So this platform is used by this platform is deployed with most of the telcos, and sometimes what happens is not necessarily each and every enterprise is using our platform to push their SMS. But when it comes to this kind of challenges, they kind of reach out to us, we always help them to register the CTA, whether our customers or not, doesn't really matter to how it matters. But at the end of the day, when they reach out to us, Deepak and the rest of the team, they always help them to register and help them to comply with the regulations. That's what we did it in 2019 when we launched TrueBlock. Again, this is how we did it even with CTA registration. So effectively, more than 98% of the CTAs which are registered as of today also registered on our platform. It shows how committed to help our customers to comply with regulations. When it comes to monetization, we were not given a lot of time to think on those lines. and we have not yet monetized as of today, but we can't rule out in the future. But right now we are not yet monetized. And it's difficult to quantify, whether it is really important for us to roll out, etc., etc. But at the end of the day, with this CPA registration, Deepak is the right person to comment on that. Right? Probably we might have one more traffic. So, Deepak, you want to add here?
Yeah, Uday. So, Balaji, how it works is that it actually, establish our leadership position over here, that we are the first one whenever, and we on the right side of the regulatory. There's a regulatory, the TRI came up with this guideline. No one was ready. We were the first ones to roll it out and to ensure that you must have seen a lot of, news articles were coming in the newspapers that, the whole SMS would get disrupted and, and stuff like that. But nothing of that sort has happened. That is primarily because we were able to roll out before anyone else and able to provide a kind of confidence to our customers that you are in the right hands. So that actually helps us in, to ensure that our customers are sticking with us and they are, in the future they would give us a larger wallet share. Right. So these, so this is what, our CTA whitelisting solution has done so far.
Okay, got it. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Yash Mehta from Art Venture. Please go ahead.
Audible?
Yes, sir. Please go ahead.
Yes, please.
So just two questions. I wanted to ask that we have registered a growth rate of 4% in the first half of this year. So will we be able to surpass this growth rate in the next 2 quarters? And will there be a better margin improvement in the next 2 quarters?
It's better, we would like to stay away from making forward-looking statements like. Let's hope for best.
Okay, all right. Thank you.
Thank you.
Cool.
The next question is from the line of Brahma, who's an individual investor. Please go ahead.
Yes, thank you. In digital platforms, what is the revenue we booked in Q2 from VI? And will there be any revenue again booked from VI in Q3? Or can we expect the similar growth of 15 to 20% in digital platforms in Q3?
So, Mr. Brahma, hi, this is Abhishek here. Are you referring to the VIL firewall deal?
Yes, the business which we had with VI and which we have winded up. Okay. To what extent it is included already in Q2?
No, so the last revenue that we had was for Q4 last year. There was a small number in Q4. In Q1, Q2, both we have zero revenue from VI firewall.
Okay.
So we don't see any headwind because of that going forward on either issue.
Okay. So because I've seen somewhere the statement given as it is normalized to 16%, wherein it actually degrew by 7.7%.
So that was the reference for year-on-year. Last year, Q2, we had 20 million close to, 20 CR close to as part of our top line and margin. That is not there in current quarter. So if I normalize for that, we would have grown 16% versus reference.
Okay. So can we expect the line of growth of about 16 to 20% in digital platforms in Q3 also? Or my other question was with the Axis Bank which we closed the deal. Will there be any revenue recorded in Q2 or will it be reflecting in Q3?
So on the first question, it's difficult to comment. As I said, we will avoid giving a forward-looking statement. only we can say is that we feel very, very robust in terms of, or promising in terms of the platform that we have developed and are developing. That is one. Second, from an ATP perspective, yes, the second customer that we have signed was mid of the quarter. So we did get partial revenue in quarter 2. The full quarter benefit should flow through to us in quarter 3.
Okay. Do you mind quantifying it, or again, you wanted to avoid that?
I think we have not disclosed that, so we will avoid that.
Fair enough. No issues. Thank you so much.
Sure. Thank you.
Thank you. The next question is from the line of Gopinath Chopta, who's an individual investor. Please go ahead.
Hi, am I audible?
Yes, sir. Please go ahead.
Yes.
Hey, good evening, everyone. I wanted to understand an outlook on the MAP platform. I mean, more in the sense of what the management team thinks of its potential. And let's say you consider Truecaller partnership and MAP in 4 quarters from now, which platform do you think would perhaps add more to the bottom line? That's question number 1. And the second question that I have is on the international expansion. Now, in the last 5 quarters, we've more or less seen the top line stagnate. And I mean, do the management think the future growth is dependent on how we expand internationally? And how soon can we expect international markets to contribute meaningfully to the bottom line?
So Gopi, a couple of things, like, without attracting the forward-looking statements, like, all I can say right now is you can expect some news in the next couple of months on both on MAP platform as well as on the geography expansion line. So we have been working on both the fronts for last 1 year, and let's hope for best. I don't want to make any forward statements, but let's hope for best. And all I can say right now is MAP is going to be big. RCS as a channel is going to be big. And so we are investing a lot of our energies and money behind our MAP platform and RCS as a channel.
And just to add, from an RCS perspective, the rich media we have seen from a promotional messaging perspective, it's very, very good. We have started seeing many use cases in terms of delivering messages through PDF and so forth, right? So we are seeing a good traction in domestic market, and as Uday just pointed out, we do wish to expand it and take it further from here.
Okay. Got it. Is there any sense of when the international market could meaningfully contribute to the bottom line? If that's something, I mean, at least not accurately, look at in the next 5 quarters or so.
So I can only say that 2 things, right? One, we OTT channels are very, very promising. So from a domestic market perspective, we have to, while yes, the SMS volume is growing, our ultimate focus as well has been on developing and on growing our OTT channels and the platform business. On the international markets, I think it would be difficult to talk anything further than what Uday just said. We are all invested in. You would have seen the investment that we have been making out in this area, and it takes time to gestate and generate a meaningful revenue.
All right. Thanks a lot for answering the question. I wish you all the best.
Thank you.
Thank you. The next question is from the line of Tawal Jain, an individual investor. Please go ahead.
Hello, sir.
Hi.
Yeah. So I just wanted to, I have been on the call and I know that you were not able to give the forward guidance based on the revenue decline. I just wanted to know because we have been stagnant in our revenues for almost 4 quarters now, and it's an achievement that we have been hitting 1,000 crore mark. All right. So I just have seen that on a financial front, 44 crores of employee expenses have increased to 54 crores. That's almost a 20% jump in the employee cost, and that has led to a margin dip of 2%. I see. So unless and until we are not seeing a revenue growth, is it fair enough to understand that our margins will decrease further, or is it going to stay constant?
So, Dhaval, I think growth is our priority, so we'll continue to hunt. I think Deepak, Uday, and all other leadership are fully focused on growth. Without growth, no company can sustain margin, that is for sure. So I think our prime focus is definitely a growth and a profitability. Coming back to margin, if you see our gross margin, the gross margin has been a narrow band of 26 to 27%. We dropped, despite VI network deal impact, which had an impact of 200 basis points, our margin has been able to sustain within a narrow band, as I said, right? And we saw a slight dip of 60-70 basis points quarter-on-quarter. Having said that, we continue to focus on growth, and hence that would help us sustaining our gross margin. Coming back to indirect cost, it's a conscious investment that we made. We are doing an investment on go-to-market and product solutions, newer OTT channels to fuel up future growth, right? So those are the investments that have been consciously being made by the management. But as I said, our prime focus would be a profitable growth, and our entire focus is towards that.
Another follow-up question. As I see our trade receivables increasing consistently. So the March FY24, we were at 842 crores of trade receivables. Now it is 4,004 crores. Almost a 20% jump in trade receivables. So I just wanted a more clarity on this.
Sure. I think it's reason for two reasons, right? One is from the shift of international business to domestic. We've generally seen international has a lower DSO days and lower things. So AR collection is much better in the international market. So that is one reason. Second is, if you see our cash, it has been 7.5 crores despite giving a dividend of the last quarter. We did see some delays in getting the POs and hence collections getting spilled over to next quarter. We have almost collected 150 CR plus by the time by 15th of October and so forth. So I think it's more to do with the mix of business moving from international to domestic. I think we should see a good collections this quarter. I'm not too much worried, frankly, on that.
This is the last question. Not again trying to ask you for forward guidance. I just want to understand that our trajectory of our company has been phenomenal in the last 5-6 years of the revenue growth. I just want to ensure that going forward, are we going to repeat of what we are going to do? How is it going to pan out? Because now we have reached 1,000 crore of constant revenue in a quarter. So going forward, our aim will be like 12-15 crore per month per quarter of the revenue, or do we have some target on that?
So we do have our internal targets, and as I said earlier, it is difficult to share forward-looking. But I can assure you that we are not sitting complacent, right? I don't think our ambition is to be at where we are today. Our ambition is much beyond what we stand today. Entire focus of Deepak, Uday, and other leadership are towards growth, as I said. So I would not be able to reveal any other numbers from here, but definitely we are much more ambitious than what the number reflects.
All right, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, we would take that as our last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you, everyone. That was the last question for today. In case we could not take your questions due to time constraints, please feel free to reach out to Investor Relations team. Good evening.
Thank you. Thank you. Thank you. Bye-bye. Bye.
Thank you. On behalf of Tanla Platforms Ltd, that concludes this conference. Thank you for joining us. You may now disconnect your lines.